The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, another day of lower numbers on the board for the grains and oil seeds, corn, and soybeans at the close, down largely 5 to even 10 cents in the August soybean contract. Some pressure in the wheat complex as well. Another strong day to the upside in both live and feeder cattle futures, though. So a little bit of a silver lining to what was just kind of another mixed blah day in the ag trade. We're going to talk about things. Joining us for analysis, Brian Splitt with agmarket.net. Brian, it's good to talk to you again, my friend. How are you?
I'm fine, I guess, Jesse. I don't know. I'm sick of looking at the board. I don't even grow the crop. I just watch the numbers go down every day. And so, it makes me bummed out. I can only imagine what it feels like if you're growing the crop and you want to sell it, right? So it's just been a tedious last several weeks here. But, we had a lot of optimism going home Thursday. We had President Trump in Des Moines, all kinds of rumors that he might announce some type of a trade deal. People were trying to throw around the idea of China trade deal. And, the actual chatter was incorrect. President Trump talked about deals we already knew about. So from a market news perspective, there was nothing there. And then you come out of the weekend and there's, additional tariffs on some of our bigger corn buyers. So that added, we went from being positive about trade to like, oh, geez, well, that just took a step backwards for our corn program. And weather's good. We had rain, right? So it's just a lot of stuff over that 3-day weekend that just, took the wind out of the sails real quickly.
Well, and I'm glad you framed it up that way, because I share the same sentiment you do and everyone else does. I mean, as a host, I struggle to find things to talk about here really for the last couple of months with how these markets are trading. It's tough to do this day in and day out across this industry when we see things just capitulating lower. And I think we can lean into this a little bit today. I'd love your perspective on this. We've been seeing more private yield estimates are coming out, and the weather has been good. Yield estimates for corn, for instance, continue to tick higher. And by and large, throw in the trade news, everything else, it just feels like all of this is feeding into that fund manager, algo type of trade. It almost just feels like all of this bearish news is feeding upon itself, and it just continues to move these grain markets lower, Brian.
It's a feedback loop, Jesse. And, probably most notable from the private yield estimates, FC Stone put a corn estimate out at 186.9, and that's just based on their crop condition model and how that translates. Arlen's a very smart man. I from reading what he had said about that, it's not necessarily that he thinks that that's where yield is, but his point is, hey guys, all of these fund managers and these institutional investors that are all short this market, this is the type of model that they have, and this is the type of numbers that it's putting out. So, don't blame Arlen. It is what it is. I mean, the modelers are going to model. You have these funds have quants, and that's what they do. But maybe the good news is that they're overdoing it early. Probably some producers out there listening that are like, hey, can my corn maybe shoot some tassels before you start talking, yield estimates? It's July. So I feel like the conversation we're having right now reminds me of August of a year ago, where it was like, how big could the corn yield be? But we're doing it in early July. So maybe let's talk a little bit about our, agmarket.net's perception of the balance sheet going into Friday, if that sounds okay.
Yeah, absolutely.
So first part of that is there's going to be some old crop potential adjustments, and based on export pace continues to see, what we would feel justifies a increase in corn for export. So we're thinking 50 million bushels, but also you're probably going to see a revision in feed residual. We think it's 25. So we're looking at a 25 million bushel overall reduction to the old crop stocks, right? So that takes you 1,365 to 1,34. So now that automatically reduces the carrying into the new crop, right? So if we were looking at a 1.75, now that needs to be reduced by the same 25 million bushels, and you're at a 1.725. Okay, so the other part of the acreage report, and everybody kind of looked at the planted number, and that went down 100,000, but they also reduced it harvested by 600,000. So if you make the changes to the balance sheet that we are looking at, assuming everything we just talked about is what actually comes to fruition, you're looking at a 1.616 on new crop. So that's not a bearish number, but we have to realize the trade is way beyond that. They're not thinking trend anymore, 181, right? So we're trying to price in something more than trend. So, let's say you go back to August of last year, for example. USDA takes yield from trend up to 183.1. Let's plug that in. All right, now you're at a 1.798. So you're 48 million bushels more than where we think we are today at a 183.1. Now, mind you, a year ago we were at a 2.073 with a 181 or 183.1 yield, right? So now let's go and use Arlen's yield number, 186.9. You're now at a 2.128. Okay, that's 55 million bushels higher than what the August WASDE report said a year ago, but with yield at a 186.9. So I don't know where yield ends up big picture, but I will tell you that I don't think Illinois, Indiana, or Ohio are record yields this year. And with 95 plus million acres planted, I just think it's really hard to get that type of a national average. So I don't know. Our current record's 179.3. You start plugging a number like that in the balance sheet, and you're at like a 1.468, right? So, but I think it's incredible. We could have almost a 187 type of crop, and not, and if USDA goes that high on yield, that's an extra 500 million bushels of production. And all these figures I just gave you, I'm not adjusting demand higher at all, which is generally if they're going to raise production 500 million, they're going to take demand up a little bit. So you get nearly a 187 yield, and our carryouts only projected to be a little bit higher year over year than where we were in August a year ago. I just think we're in the process of overdoing it. So we'll see, but that's the market, like you said. We're in a feedback loop right now, and everything's just bearish.
And what's fascinating about all of this, and all the stats and the numbers you threw out there, wherever we end up with some of this, at the end of the day, the market, what is the market telling us? And by and large, it seems to me it's telling us that one way or another, we're looking at a fairly ample supply until proven otherwise, Brian.
Right. I mean, at this point, there really is not a reason for the trade to say, you know what, supply won't be ample. Will it be the type of carryout we thought we could have, a year ago, where people were talking 2.4, 2.5 type numbers? You got to have an incredibly large yield to get to that type of a carryout number. So I think using Arlen's 186.9 as being pretty aggressive on trying to create a rather bearish scenario, and it's still, to me, and it's bearish. I mean, it doesn't say we need to go to $5 corn if you use that type of a yield, but I don't see us needing to go low to mid threes either. You look at December corn bottomed at 385 in August of a year ago, and again, we were thinking carryout was going to be a little over 2 billion bushels, 2.037, so or 2.073. So I don't know. I feel like you had September corn go off the board a year ago, and December became the front month contract that left a gap on the chart at 394. September is going to be the front month contract as of noon on Monday. We're about a nickel away from that 394. I tend to think that 394 area, if we see that on a front month basis, is going to be a very, very strong support level.
Brian Split with agmarket.net joins us here today for market analysis. I want to rope in the whole trade and tariff conversation here as well. As you brought up, last year we bottomed sub 4, let's say, in corn. And thinking about everything that's going on with trade right now, what is it going to take for us to maybe spur up even more demand? Corn demand, though, I would argue, has been pretty solid as of late. But You throw in Trump's love letters to other nations, as I'm starting to call them here, with the tariff talk with South Korea, Japan, and others. I mean, thinking about everything going on in the headline news with trade and tariffs, how does that play into where this grain market maybe gets to a low enough point that it could stir up more demand, Brian?
Right. I mean, so you're just adding bearish to bearish, right? The tariff talk, adds another element or variable of bearishness to the crop growing, and increasing in size simultaneously. Now, what could change that? Well, just naturally, as prices go lower, we're going to continue to spur additional demand. So, what happens, and this is similar to kind of like last year, prices go down, they get to very attractive levels, and then all of a sudden the crop isn't as big as we thought it was. So prices really shouldn't have gone as low as they did, which spurred more demand than we should have. And then you end up seeing, the export program several 100 million bushels higher than the USDA estimated in the first place. So that's the type of thing you need. If you could get a trade deal, if you could really get China to come to the table and make some type of agreement. But, I don't know that China's going to do that just because Trump wants them to. It's probably going to be more of a matter of convenience, like 2020, right? Well, we just had COVID in 2020 and everything went to really low levels, right? $3 corn, $9 beans. And so, like, why wouldn't China be like, yeah, sure, let's have a trade deal. We need to buy stuff. So this is a great time to do that. Mm-hmm. So as this market continues to go down, I mean, you think about inflation just in the last 5 years, 10 years, $4 corn is not the $4 corn it used to be, a decade ago. So from an inflationary perspective, I got to believe that these prices still very big picture look very attractive to end users. So I don't know. I would like to think maybe we could get a trade deal, but it's probably just going to be a matter of convenience, and we're cheap enough to just agree to buy a bunch.
And it's going to be the waiting game to see what happens with any of these potential trade deals and what it could do for the market. I want to ask you quick about the wheat complex. I feel like we've been leaning into corn and beans a lot, but wheat's been going down a bit too. I know winter wheat harvest is playing an added role there with some pressure in these markets. Anything for you as you look at the charts on the wheat side that you're watching this week, Brian?
Chicago wheat continues to hold support. We, much like corn, we had kind of that optimism rally in the late last week, and then we came right back down to support afterwards. But to your point, we've got harvest going on. I would like to think that if this market could continue to progress through harvest without breaking through the lows that were made in the month of June, that maybe that's a good sign that we've already seen a harvest low. And not to beat corn to death, but let's also remember that we've got that safrinha crop coming out of Brazil. And we're probably going to be about halfway through their harvest in the next week to week and a half. So, is that another component? Do we need to see like a harvest low in South America at the same time we're really overdoing our yield estimates to the upside on our domestic crop? And maybe that's when we kind of overdo it. But yeah, the wheat market also is going to see maybe a little bit of a revision down in stocks. Harvested acres were reduced on that as well for winter wheat. So that takes roughly 50 million bushels off. We think we can maybe see some revisions in the world side of things. I mean, it's really, you've got some hot and dry in other regions of the world. I think the French crop's going backwards. Russian crop could probably stand some revisions lower. I don't know if the USDA will actually do it, but I think there's reasons for them to. So I don't know that wheat's going to be, a bearish component of this report either. And frankly, our export program for wheat's pretty solid right now. So I don't think there's much of a concern as far as, hey, the crop's the carryout's going to get bigger because we're not moving wheat out of the country.
Yeah. Good thoughts on wheat. Excellent thought there, too, on that safrinha crop out of Brazil. Another piece we have to watch. Let's go to livestock. Cattle, another strong day in futures to the upside on Tuesday. And here's a market that, Brian, we've talked about this before, and it just seems to continue to defy logic, but in a good way. I mean, prices are getting some rebound here again. You look at cattle, what stands out to you right now past the 4th of July holiday?
In feeders being the leaders, we made some new contract highs yesterday, really made some new contract highs here today, up over $5 on the lead contract. I will tell you, August feeders, I think it was maybe back in April, and then or it was March, and then May, and then June a couple times. But there's like a bunch of peaks in August feeders, and they're all running along the same line. So August, I believe, if we hit that kind of that upper channel line tomorrow, it's going to be like 221, 221.05 or so in that vicinity. So that suggests maybe if feeders are up another $2 tomorrow. With this run that we've had, we're kind of getting to the upper constraints of that overhead channel line. That might be a spot to back off a little bit from, and maybe just pull back and retest the old contract highs or something like that. I'm not thinking that that's going to be like the end all be all stop to the rally, but you look at live cattle today. August made new contract highs today by about 20 points. We did close back below the previous contract high, but still a new high settlement. And it looks like that pullback that we had off, that we had that last downturn, just fits right in line with your typical downturns off of new highs. You pull back $8-10, the market starts to slow down, and then you start to run higher again. So, June's off the board. August is still looking at the cash market, and we've played this over and over again in the last several months, where it's like, okay, one contract goes off the board, the next one's on the board. Now it's the front month, and cash is significantly higher. Let's buy it, right? That's the game that they're playing right now,
and it's something that, to your point, we've just seen this over and over and over and over again. And I'm one who's probably called a top in this cattle market a couple of times, foolishly done so. And I'm kind of at the point where I just have to stop, because we keep hitting these new contract highs. Cash continues to surge. And by and large, I don't think anyone quite knows where we're going to finally top out. I think the best thing you can do is just manage your risk, whatever you can do on any side of this cattle complex right now, Brian.
Yeah, I mean, the fundamental side of things is still friendly. That hasn't changed. It's not like we've expanded the herd here all of a sudden. I mean, that's still the baseline bullish fundamental of the market. I had a client, was like, well, how's box beef doing? And I said, well, let's go back a month and just look at where it was a month ago and where it is now. And, we're choice is what, $22, $23 higher than about a month ago. Select is maybe 17, 18 higher than a month ago. I mean, we continue to run, those to solid levels. Box beef would get up again today. So it's just, we haven't gotten to that point where the consumer balks, but I don't know. I mean, it's like, am I going to not pay $6 or $8 or $10 for a burger when, like, I walk to CVS to get toilet paper and paper towels for the office and just get one bag each, and I'm spending $45, right? So like, why am I going to balk at paying $10 for a burger, right? It's just the atmosphere we're in. Everything is going up in price. So I don't know. And when my wife and I want to go out for a nice meal and I want to spend a little money on a dinner, I want to eat beef. That's what I want. I don't want to go out and have a chicken dish. Sorry, poultry producers, but that's not what I want to pay good money for.
Well, and to that point, that is so many people, myself included. I mean, if I want beef, I'm going to pay for beef. I'm going to find a way, however it works. I mean, that's what I want on my plate. That's what I'm going to have. But, to your point, I mean, the cost of everything going up, I think that's the broader conversation for just our economic health and more. I mean, I'm on vacation this week with the family a little bit, and 3 pizzas from a pizza joint in the Gulf Coast of Florida was $130. I mean, 3 large pizzas and some breadsticks. I mean, it's amazing how prices have just continued to balloon and inflate higher here for so many things, Brian.
Yeah, right. Except for grains.
Well, that too. Yeah. I mean, that's the only thing that it hasn't done. Maybe we'll get that here eventually soon. Brian, as we close it out today, always appreciate the perspective. Any final thoughts you'd have for folks, or anything you would reiterate to them here as they're watching these markets?
Yeah, I know that this is not the market that we wanted, and we didn't get the typical rallies that we would usually get in May or in June. I mean, we had a May rally that was like 20 cents, and then we had a rally, July 1st for 2 days. It was about a 26-cent rally in the last Thursday. We just didn't get any kind of 50, 70, 90-cent run that we got in a lot of these previous years. That doesn't mean it's not coming. It may just not come at the time of year that we typically think it would. Market overdid it last year, and then December corn rallied 50 cents from August 26th to October 2nd, right? And then we chopped around and had a whole other leg higher into February. So I think if you are in a position where bushels have to be released and sold, I think you got to find a way to maintain some type of ownership of it, some type of an option position. I just don't think this is the right time to relinquish ownership of bushels at the stage here for corn.
Well, Brian, I know if folks want to have a conversation with you, the rest of the team there at agmarket.net, you guys have a ton of resources available on the website, phone numbers there, et cetera, et cetera. It's just as simple as going to agmarket.net, isn't it?
Yeah, agmarket.net's the website. You can do a whole bunch of stuff from there. Look at our research, get a trial there, check out our app. If you want to talk to somebody directly, 844-4AGMARKET, so 844-424-6758.
Brian Splitt, agmarket.net. Always good to hear from you, my friend. Have an awesome week. Thanks for joining us on Market Talk today.
Yeah, I appreciate it, Jesse. See ya, bud.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.